Hello, everybody. I'm Peter Grant with Zaner Metals. Welcome to This Week in Metals. It's the first trading week in August. The summer is flying by. My colleague is with me, Peter Thomas. How's it going?
It's good in Chicago. It's raining, and we're kind of waiting to see how much this bottle has been shaken and if it's going to pop.
Right. So the metals remain on a bit of a tear. Gold was up nearly 4% last week. It
Right.
was the eighth consecutive higher weekly close, and it closed up 10.6% for the month of July. That was the fourth consecutive higher monthly close. We set a new all-time high at 1983.13 on
Right.
Friday. So we had that first run to new highs early in the week. We became corrective consolidator for a couple of days, and then
Okay.
saw a bit of a bid on Friday, where we eked out a new all-time high. Remain below 2,000 though at this point. What are you thinking here?
Well, I'm thinking one of the most significant things that we saw. There were two things we don't want to pass up. First thing is we saw 19 consecutive weeks of money flowing into ETFs, which is the first time that's happened since 2006. That's pretty significant. That's a lot of cash flow. So what we're seeing for the first time in a very long time is people taking money out of the stock market, calling their brokers and going, buy me some gold. And they go, oh, you buy an ETF. And they are flooding the ETF with money. So I thought that was very significant. The second thing I think, which really kind of agitated this market and giving it more potential for upside, is that the powers that be in China are saying we would prefer that our citizens didn't own gold. And everybody went, what? How fast can I get to Hong Kong and how much can I carry? So the underlying market is very, very bullish in the physical offshore.
So what do you think is sort of the underlying story to the Chinese not wanting their citizens to own gold when they've been, out and out
Yeah.
encouraging them to buy gold for, you know,
Um,
decades now?
36 months, 36 months at least. With an average number, I'm seeing around 13 tons a month going in. I don't know. I think some underlying weakness in the renminbi and its trade. I think they wanted people to keep the money in the offshore Chinese yuan, and I believe they were a little bit concerned about it. And and rightly so. I mean, right now they're looking at Taiwan again, and if that gets ugly, that could be very interesting because we're seeing a great deal of pressure on the syringe, if you will, that drives the business into mainland China, which is Hong Kong. HK's felt a lot of pressure, and if they're leaning on the countries around them, a lot of people could start backing out of the market.
Yeah, that's going to be an interesting story to watch to see
Yes,
how it unfolds.
absolutely right.
What do you think of the investment demand? So we know that investment demand has been huge, and in
China.
fact, the ETF inflows have largely offset the lack of physical demand from Asia.
Okay.
Um, so and that's encouraging. I mean, obviously, I think a lot of
I
those
assume
people.
you're saying India within Asia. I
Yes.
assume
Oh,
that.
absolutely.
Yeah.
Yeah,
Okay.
absolutely.
Yeah.
Um, Certainly I would like to see U.S. investors diverting some of that investment flow from the ETF to actual physical. I think they would be far better served in the long run than having uh, than that they do have physical exposure to the precious metals as opposed to just price exposure through the ETF. Um,
Absolutely. Real gold is better than paper. You and I have always said that. And the idea that you just made 200% in your Apple stock, maybe you should take 10% out and buy some physical. And you and I have been singing that song for a very, very long time. And over the last few years, it certainly had some very nice payback.
Right. And so when you think about all the liquidity that's been injected into the market and the Fed and
Yeah.
broader central bank largesse that we've seen, Typically, that would be a risk-on scenario where people would be jumping with both feet back into the stock market, and we certainly have seen some of that.
Yes.
But interestingly, the precious metals are performing very nicely alongside, during this risk-on environment. So, what do you think the psyche is with the investors?
Well, I think it's very pragmatic. I think that a lot of the investors are older investors now who understand that there is this monster called inflation, which is hiding in the closet. They keep that door locked and they got the keys and the padlocks on there, but you keep pumping that equity in. You will rally that market, but at some point you're going to go from zero to wherever. And the question becomes, when is that beast going to get loose? And when it does, you want to own some gold.
It's the Fed. It's the Fed that's trying to knock that door down. They are committed to inflation. But
Yeah.
it's like, the bull trying to get in the china shop. He's pushing on that door, and when he comes in,
Oh
all heck's
yeah.
gonna break loose.
No, I concur. And you're asking me, and that's what I think. I think that beast is hungry and it's ready to go.
Right. I was also encouraged to read recently that millennials have taken a lot of interest in the precious metals market for a
I've
change,
seen a
and it
lot of
and it
that.
might be, flavor of the month. They
Yeah, yeah,
and that's
exactly.
fine.
Hmm.
Because it's a driving force, and if the millennials become fans of the metals, it could be a driving force for some time to come.
Well,
So I
this
welcome you,
rally is
millennials.
kind of bringing them out of the woodwork. I will tell you that I had a couple of people who said, "Pete, I bought these kilobars from you 15 years ago at 800. What are they worth?" And when I told them, they almost fell out of their chairs. They were like, "What?" I was just thinking about trading them in, and I go, "I put those in your IRA. They're still there, right?" And I said, "Okay, let's be real careful how we take that out, shall we?"
Right.
But a number of our millennials have come out with metals that they bought from us quite a while ago and have had some very, very nice returns. And a lot of them, very interestingly, say, "Why don't I take half that kilobar cash and put the other half in coins, kind of like a dividend?" Which I thought was very an interesting statement. And one of my gals, who is a very big stock player, said, "I'm going to look at this like a dividend. Send me some gold eagles." And I'm hearing that more and more.
Right. I'm definitely talking to more younger investors on the retail side of things
Okay.
as well, and I'm enjoying it immensely. It's an
Yeah,
opportunity to
absolutely.
educate. I'm happy to answer all their questions. So if you're a millennial and you're out there and you're looking to buy some gold or silver, platinum or palladium, please give us a call.
Still
Or,
have
uh,
some, and
yeah,
we'll buy it as well as sell it.
right.
Yeah.
Let's move on to silver, which
Yeah, let's
was
do that
the
because
the
boy,
big.
there's a lot of stuff to talk about there.
How
Why don't you
about it?
start, Pete?
So silver was up 7.4% last week. It was the seventh
Nice.
consecutive higher weekly close. Silver is up a whopping 34% for the month of July, and it was a fourth consecutive higher monthly close. We've retraced 38.2% of that entire decline
Right,
from darn near $50 in April of 2011 down to $11.63 in March of this year, the post-COVID low.
right.
And so we've retraced over a third of that. We've traded briefly above $26
That's
on,
an important number. Would you
yeah,
repeat that?
traded, I think as high as 26.11 on
That
Monday
was it.
last week.
Yeah, startling.
Interestingly, that day it was a very volatile day. We actually had an outside day with a lower close. That's a key reversal. But we never saw any downside follow through. The market has been confined to last Monday's range since then. So no downside follow through despite a key reversal. What do you see going on in silver? What do you know?
What I know is that we've had the biggest rally since 1979. I know that we're seeing 25 straight weeks of buying in ETFs, which is unheard of. And we have the potential from, I believe it's from the Silver Institute, which is probably one of the best factual presentations out there. said that we are going to go into our first silver deficit in 5 years as far as mining production, because Mexico and Peru are both uh, not mining, not producing because of COVID, and they're having some problems also with the miners coming back to work. They're very fearful of what can happen, and so they're not convincing them to get anything revved up anytime soon. And if we get into a 5-year deficit, it could become very interesting because there's already a shortage, as you and I both know, of product.
Right, right. And I think you mentioned to me that Mexico and Peru alone account for about 40%
40% is the
of
number.
mine
You hit it right
silver.
on the head. Yep.
Yeah. And so if that happens, tight supply,
Right.
uh, out of this world demand right now,
Yeah.
um, higher prices. That's my projection.
U.S. Mint is going to be has already said they're cutting back their production. So where do we find silver is going to be the thing. It is a matter of
Right.
if you want it, you what are you going to pay for it? That's the
Yeah,
number.
and I had maintained, several weeks ago that I thought of our wholesale clients and retailers were in a good position in terms of availability of
Of
small
product.
bars and
Right.
coins,
Yeah.
and but demand has been like so out of this world that
Oh yeah.
we're seeing stuff drop off in terms of availability, and we're seeing the premiums shoot higher once again. So
Yes.
if you're in the market for silver, um, boy, and you want it soon, get
Yeah.
on board.
If you want it soon is the thing. Okay.
Yeah,
I like
right.
that. Yeah.
And so with silver up uh, 34% in July and gold
Right.
up 10%, 10.6% in July, you might be surprised to know that the gold silver ratio fell 16% in July and hit a 2-year low, or near a 2-year low, around 75.38. And so half of that huge rally in the ratio from 30.45 back in 2011 up to March high of 128.23, half of that rally has already been retraced, and it doesn't show any sign that it's going to
Slowing
reverse
up.
anytime soon. So
Well, and I might say, old wise one. I seem to recall you said, "Hey, I think it's about time this turned around." I think you, very nice pick, very nice pick.
well, when it gets up to darn near 130 in the ratio, it's like you know I
Still, I mean,
I, I thought it had gone too far when it hit like 95, but
okay.
so my timing wasn't necessarily the greatest. But if you keep calling it top, eventually you're going to hit it, right? Yeah.
Okay, I'll run with that.
Right, right.
Why
What
don't
else?
we slide into our PGM so that our people are all of our scrappers
Yeah,
and our platinum palladium consumers know what's going on.
yeah. So platinum palladium did not fare so well last week.
Right,
Platinum was down 2%, and it did hit a 5-month high before it came under pressure.
right.
It was up nine. It's even with the sell off late in the month, it ended up with a 9.2% gain for the month of July. Um, and So, again, a
Well,
little bit of weakness late in the week last week.
we saw our scrappers coming in. They were selling product pretty aggressively. They did pretty well. No matter how you slice it, if you had product in the yard, you were 2% ahead over last month, which sure beats the T-bill rate. And bottom line is that I had a pretty good um, little note from Dr. Davis, who's one of my favorite people, who's a metallurgist from South Africa and worked for the mines for decades and decades. And he told me, in all sincerity, that they were looking for an 18% loss in power production. And guess what, folks? Without electricity, you don't run the mines. And right now, their production has been down tremendously, at some points almost 40%. So if you take another 18% off of that, even if they get people back into the mines and COVID settles down, we're still not going to see recovery. So we could end up with this commodity also in shortage. The potential is there.
Yeah, I mean that's sort of been an ongoing problem in South Africa for
Yes,
some
it has.
time,
Yeah.
kind of the rolling brownouts.
Yeah. Yeah. That's very
That
well put.
if you can't run the lights and the pumps and the
Sure.
um,
And the pumps are critical because they get a lot of water buildup in those deep mines and they have to pump fresh air down there too. So I mean, if you're ankle deep in water with no air, you aren't running any mine equipment, you know.
yeah, exactly. So,
Yeah.
yeah, so I mean, I think that so the platinum, basically set back into the range, retraced some of the recent gains, but as I said, still was up almost 8% for the month of July, or I'm sorry, 9.2% for the month of
Yeah,
July.
it's been very strong.
Similarly, platinum was under pressure last week, dropped 5.3%. Um, it's it did set a 3-month high at 2343.10 before it came under pressure, and
Right.
that was the one that was up 7.9% for the month of July. So it had a great month,
Yes.
kind of faded into the end of the month. What do you think about palladium at this point?
Well, I'm saying year on year, I mean, if we close out the year and let's say it's only 70% better, I mean, oh gosh, poor me, what am I gonna do? I
Right.
mean, let's be pragmatic. This market has been moving up. Demand is good. The production is good as far as AutoCADs go. I want to be clear on that. We're seeing good recycling going on. So that's the only thing really keeping this market alive is our scrappers. I mean, we're not seeing new product coming in, so it's hard for me, Pete, to be bearish.
Gotcha. Dr. Copper
Yeah,
dropped about 1%
yeah.
last week. That was the third consecutive lower weekly close in copper. Um, and yet again, it had a good month. It was up 2.7% for the month of July.
That's what I got.
But gains, we still haven't seen $3. So
And
what?
copper has been under pressure. We saw a little less consumption coming out of China. Let's not forget, over 60% of consumption of copper is China. And until they come back to the table, we're going to see continued pressure. I mean, the EU is getting stronger. The dollar was slipping a little bit. Their buying power has come up just a squelch, but not enough. But I have a feeling that if it gets a little better in China, they're going to be coming in with a vengeance. And I don't think they care where 280 or 290. China buys when they need product, even though they are good traders. If they need it, they're going to come to the table.
Yeah, and I would point out that the corrective activity, again, even though it's been 3 consecutive lower weekly closes, it's been modest on the downside. It is not like
Yes,
it's selling off aggressively. So, there seems to be some buying support coming in on the dips, that's preventing it from being, a more aggressive correction, I think. And
I
at
agree.
this point, the trend is still up. So,
Our
um,
scrappers are loading it by the truckload, and demand has on the ground has been quite good. So here in the United States, we're seeing product demand is good, and
mm,
and that's with the auto market just in the tank. So the question becomes, what happens when this market gets better and durable goods
right.
get better and automobiles get better? I think
Well,
copper
yeah.
through $3 is you got to be pragmatic here.
Right. And so the data have been sort of mixed lately. We were
Yeah.
seeing the June data roll in, and it's pretty good.
Yeah,
It was sort of
surprisingly so,
sort
actually.
of before that second wave of COVID bad
Okay.
news started hitting. So
Yeah,
so June durable goods were up 7.3%. It beat expectations, which were
by a mile.
6.5%.
Yeah, right.
Um, but then you look at like July consumer confidence, they were expecting a little bit of an uptick and they got a downtick instead. It dropped down to 92.6. Home data, home prices and home sales were good. Um,
A home data and home sales was startling, quite frankly.
yeah,
Yeah.
yeah. Um, the bad news was, we got advanced Q2 GDP last week. They were expecting down 34.5%, and it only came in at down 32.9%. So that's a little ray of sunshine, right?
Yeah. I mean, it's been like you said. I think we have a real yin and yang here. Real the washing machine is just agitating. These numbers are back and forth, and nobody quite knows where they're at, but they know they're buying stock and they're buying gold.
Yeah.
You know,
Um, Again, personal income was down 1.1% last week,
uh,
but PCEs was still strong. So people are
right?
still spending money.
Yep.
And then the big news I think last week was the Fed, and the Fed, you know, as expected, they held
Yeah.
steady on rates, and that's not
Right.
surprising given the mixed data
Uh,
that's rolling in. Um, uh, but they were pretty aggressive in saying that we remain prepared to do whatever it takes.
yes.
The foot
And
is
that's what we
firmly
said
on the
last week.
liquidity gas
This was
pedal.
no surprise to our viewers. None. I mean,
Yeah,
we expected this.
we saw an interesting sell-off during Powell's policy statement, or during the press conference,
During,
anyways,
yeah.
where he talked about some concerns that there wouldn't be a V-shaped recovery, and he also said COVID is a deflationary event, and so gold and silver sold off intraday pretty
Right.
aggressively, but it popped right back up.
I
It's
was
like
just
this
going to
is
say it was just looked upon as a buying opportunity. Goldman Sachs came out, their research division on silver, and said, we think we might see $30. And
yeah,
everybody went, excuse me? Wait
right.
a minute, $30?
Well,
Yeah, they went,
it happens quickly. If you recall,
yeah,
last week I said $26 in silver,
yeah,
and we
right.
were there on Monday.
Yeah,
Like
yeah,
was
right. So, I mean, we've seen a lot of mixed news here, and I think we've done a pretty good job of recapping it for everybody.
yeah. Well, let's
Yeah.
look ahead to this week.
Okay.
Um, uh, First of all, Monday's a holiday in Canada, so our friends in Canada won't be trading apparently. Oh, they certainly can trade with us. We're open.
Yes, we are.
Um, we've got July manufacturing ISM and PMI,
Big
and
numbers.
this is an important one, and you
Yep.
already alluded to this. July auto sales come out on Monday.
That's a
The
monster number.
expectations is cars 2.4 million, light trucks 8.3 million. So still pretty anemic,
Yeah.
but
Yeah.
not like
Not as bad as
horrible.
it could. For trucks, I like the number. I'm kind of surprised it's that high.
Yeah, those
We'll
those are
see.
the expectations. So we'll
Okay.
see
All
what
right.
happens today on those. Factory orders on Tuesday, market expectations plus 5%.
Okay.
We get the ADP survey on Wednesday, the ADP jobs survey. Expectations 1.5 million private jobs. We also get trade on Wednesday, and then we get the services, ISM and PMI. But the big news for this week is obviously non-farm payrolls on Friday.
That's the biggie.
Um, the market expectation is plus 1.9 million jobs. That's coming off of 4.8 million jobs um, in uh, in June, which was the big surprise
That
number.
was the big surprise
So
number.
we'll see how this one plays out.
Right.
Market's expecting the unemployment rate to drop to 10.5% from 11.1. And then we also have wholesale sales on Friday, where plus 4.8% is expected. And again, these positive numbers tend to be June numbers. And again, so you
Like you
might
said, the
mentally temper
resurgence of
them a little
COVID,
bit.
the second wave, if you will, might have influenced those numbers. So it's going
Yeah,
to be an interesting week.
yeah. So hopefully the market likes these numbers, and again, as we've said for the last several weeks, the trend here is your friend. Look for
Yeah.
your opportunities to get on the trend, and I still like this market, and
Sure.
for all the same reasons that we've mentioned.
Come on in, guys. The water's warm.
Especially you millennials,
Yes.
we want to meet
Absolutely.
you.
We've been here 40 years at Zaner.
Yeah,
Come on, guys.
come join us.
Yeah.
All right, my
All right.
friends, have a great first trading week of August. I'm
Absolutely.
Peter Grant with Zaner Metals.
Pete Thomas
Have a
in
great one.
Chicago, and thanks for giving us a like and definitely give us a follow.